morning.
Hi, Lydia. How are you?
I'm good. How are you?
Good. It's been a while. Didn't have a chance to wish you a Happy New Year, even though
I
it's
know.
February.
Happy New Year.
So, how's 2016 going for you? And what a great time to have you here with the EU meeting, talking about the fate of the pound and Great Britain in the EU. It seems to have a lot of quiet action in the market today. Do you think that the markets are hesitant to do anything with what's happening in Europe regarding cable in Britain?
That might be the case. It's been so much, it's been so many years of the Brexit talk that I've had fatigue about it, so I don't even pay it attention. I notice the headlines. I feel like European politics, it doesn't impact the markets as much as the headlines would like us to believe. It's the same with the referendum and the
Yeah.
Greek crisis, and we kind of get this build up and then it fizzles and price action resumes.
Okay. So, dollar's been moving sideways. Pound's been a lot weaker than the euro, as exemplified by
Yeah,
the euro
yeah,
pound chart. Yeah, the euro
absolutely.
pound chart that you had up there. What's your view? When we talked. A lot of people, some guy on Twitter, when I liked the euro pound at 70, said that if you don't think it's going to go to 68, you better apply for a job at a car wash. And I said that the car wash didn't hire me because I just wanted to ride in the cars and listen to the radio. But we're almost at those targets from that Head and Shoulders bottom on the weekly I talked about, looking for about 79 or 80. What are you seeing here?
Yeah, so I think a lot of people have seen this divergence that you've seen here on the daily chart,
Yeah,
and we've gotten, we've had bears step in at the tops, and then we've started to get these lower highs. But
yeah,
and even the thing with the euro pound is that it diverges. It can diverge and it still doesn't mean anything. It's not as reliant a signal as it is against some of the other pairs, like maybe the pound dollar. But
well,
it's
it's
still
only
something to watch
diverged.
nonetheless.
It's only diverged once. So sometimes, you know me, they call me Mr. Three Drives. So when I look at this chart, it looks like it's incomplete. We've had one, we've had two, and perhaps there's another attempt to the upside for a three, which would then give us our second divergence.
Yeah, well, we have this divergence back here in
Oh, okay.
September. So we had this divergence here, which should have, I mean, we got the breakdown, but this is where we got the failed low and
Right.
bottomed out. So it tends, it is a signal, but it doesn't always give us the outcome that is fully expected. So I think here, and this was right when the ECB had cut rates and
Right.
the negative rates, and we know everyone expected at least new lows below the 69.30s, and
Yeah.
definitely like your friend is saying, at least the 0.68, 0.65, and we never got that true close below the dollar, but 0.70 pence level. So this divergence I would take with a grain of salt. I think you can take some profits at the highs, which is what we've been doing, and then you'll get the seller strength coming in at the highs. But what's been interesting is that this fib has been holding up, and it's really the 77 support level has been
Yeah.
holding strong. And really, as long as that holds short term, into next week, as long as this level holds on the lows, the euro pound remains bullish, regardless of the divergences that we might have seen. So we're getting it even on the 240. So I like to see it on the minute, the hourly charts, and then on the daily charts to see if that divergence is true.
Right.
So I've been
Okay.
tentatively bullish. I have been trying to sell the highs, and been stopped out. When we move past break even on the short side, I've been stopped out on these tops, and then getting back in long on the dips. So really long term, or even medium term, this is still a buy. to me, the euro pound
Okay.
is still a buy, and we're still headed to 80. And
Okay.
that's when we'll see. So we've been hitting this support. It's now resistance. It's former support, this crazy zone. We had this crazy price action on the way down, which took us forever to break down right before we got this precipitous fall. So we're
Right.
seeing that happen again. We're having problems to the upside with this little zone. But to me, this pair targets 80, and we're trying to get above these highs that capped the top side back in 2014. So that's the target long term. That's where we're headed. And once we get to 80, we'll see what the market does with the euro. You know, the ECB is undoubtedly dovish. It's likely they cut rates again. And it'll be interesting to see if the euro continues to rally in the face of that. It's kind of like the yen action I'm sure you guys have been discussing. You know, we might be having negative rates, but the yen keeps rallying. I
So
think we'll have
let me ask you this, Lydia. I was right about the direction because it looked like a head and shoulders, and that was a right shoulder down there near
right
70.
here.
And it
Sure.
measured the breakout was about 4.5. So I could understand your 80 target. So when you look at the euro pound and it's in a bullish mode, does that make you a more willing seller of cable?
No, actually, I'm a little. Let's see. How do I
Because
say?
most of that
I am.
move, most of that move in euro pound,
Euro
I
pound.
thought it was going to be due to euro strength, and it was really propelled by cable weakness.
I think we've gotten a little bit of both. I think when we got to point 7, so 775 was the line that said we were going to reverse higher or we
Hmm.
were going to stay lower. And on a former fib, actually a fib drawn from here, you would see that the point 75 was a 50 back. So when we broke here, so we got euro strength on the way up, but after we broke, you're right, the rest of this has been pound weakness, which might be why we're getting this kind of this kind of weak bullish action at the highs, because the euro dollar is actually been been contending with dollar strength as well. So I mean, I actually think cable has bullish tendencies. It's
Okay.
bearish. It is a bearish pair. Let's move it. So it's bearish.
You
We
know,
got the Fibonacci move here. So it is a bearish pair. It's still in bearish territory, but this price action is very bullish because we've seen it before. Back in 2010, the same lows. It's $1.4250 is
right.
a serious support level. And we haven't seen this, since 2010. So we've seen this play out before. And it's hesitant because fundamentally the pound is weak. The the Bank of England is dialing back its interest rate expectations. They're expected to go dovish. They may cut, and we're not getting moves lower. Likewise, even last week we got strong retail sales out of the U.S. Today we got the strong inflation data, which would keep the Fed hawkish, despite all the volatility in the markets, and yet we're not getting these moves lower. To me, those are huge red flags when the dollar is not able to rally on its own fundamentals.
Let me
Typically, historically, we've seen it move in the opposite direction.
something that I hadn't seen for a long time was a lot of people correlating cable's movement with oil, treating
Oh,
it
interesting.
in a way as a petrocurrency.
Okay.
So that was part of I think part of the rationale for selling off the pound. Have you noticed that too? That people are correlating crude to the pound as of
No,
late?
I
Okay.
haven't seen that actually. People are still.
Okay.
What I've seen is still the Canadian dollar is kind of the main proxy
Okay.
for
Yes.
oil.
Right. Okay. So that's so we're looking at the pound, and you're looking for reasons to get long.
Yes. So this is the fib move that we got last week, 2 weeks ago, and we're still working on it. And I'm watching these lows. You know, we'd like to see that we close at the lows here. We'd like to see that we break new lows, right? Because we're in this Fibonacci move right now. We'd like to see that we break new lows and go to $1.40. If we get to $1.40, you know, get below this 40.80 level, will we close down there? That's what it would really take for bears to start piling in. So if we get a close, a Friday close below these lows at 40.80, that would turn this pair decidedly bearish. I think with
Yeah,
more
I've seen a lot of Elliott counts and or technical pictures that eventually some of the cable bears are looking for about 135.
yeah, I've seen that
33.
too.
Would that seal the fate for that kind of target if we closed under that, what'd you say, 140.70 level?
Yeah, if we get under 40.70, then we could see a real drive towards this 135, and it's actually a resistance zone, so we'd see it starting at a 136 through
Okay.
137 through 135. We start to see this zone of support come into play, and yeah, so I've seen those calls as well. You know, I'm a little more conservative, so I'd say we have to get below $1.40, which we've had trouble with, and if we were to
Okay.
close below, at least below these lows, we'd have a real shot of targeting $1.35.
Okay,
But
so 140 is your line in the sand.
yeah, well, right
Closes
now the
under
former
140.
lows, say 140.80.
Okay, got it.
Mm-hmm.
Okay, so what do you think as far as pound against Kiwi? That's a popular pair traded in LAR. A lot of people trade it as a risk-on, risk-off pair. What's your view on
Okay, so
pound against
the
commodities?
the kiwi, the pound kiwi to me is bearish. It's a bearish pair, but it's been grinding. So it's been stuck in ranges, and then it grinds lower, So if we can zoom it out a little bit, oh, it gets a little messy. See if I can hide this. Okay, so really it was 224, so we were stuck in here, 230, 224. We broke below 224, and we got this drive lower to 215, came up and held below 224. And so when we got the break here, we turned bearish. When we got the cap here on the bounce, that confirmed the bearishness. And so we've just been really grinding lower. This pair is one that you really got to trade the ranges. So our previous range has been in here when we started the week at 219.50, between 2 and 215. And so we've really been in this range pretty much all week. So you can see the former range here between the 224 and 219, and now we have a new range here, 219.50 to 215, and it's bearish, but it's also range. So if you're a range trader, you can be comfortable coming in at the bottom. We did that earlier this week. I personally, maybe some of my readers caught it, but I missed this. My order expired. I had 1950 order here for about 2 weeks, so it expired. And when we opened, it came up that high, and we got back to lows. So at 215, I went long, waiting to get to 215, back to 219. Got stopped out at break even when we came back down. Well, nicely above break even actually, but stopped out nonetheless when we came back down, and now we're just chopping around. So I'm not quick to get back into this pair until we get either to the bottoms to 215 and we hold again for a move to the upside, or we get back to 219 or even 218, and I would short at the top. So right now we're just kind of in no man's land, and I would just wait this one out until we get a definitive move to the top of the range or the bottom of the range, or a break, or get a break in one of those directions. Kiwi fundamentally should be weak, and right now we're getting not just Kiwi but also the Australian dollar and the Canadian dollar are all rallying right now, despite there's still weakness, right, in commodities. It's not the fall or the crash that we've had the past 13, 18 months, but we're still getting these dips lower. So as long as the commodities are consolidating right now, we're seeing that the currencies, the commodity currencies, are actually finding some strength.
Okay.
So this one to me still remains a sell.
Okay, so pound crosses against commodity currencies still have a negative bias because of the continued or basing process that commodities are going through.
Right, and then you couple that nicely with the bearishness that's going on in pound in general. We're not seeing it. We're seeing we're seeing it against the dollar. It's not as strong as I think it should be. I would think that we'd be back at the $1.40 lows, but we're seeing pound weakness more so than anything against the euro, right? So we're coming up against 78 again. If we can get this is probably the best pair to gauge pound weakness or strength right now.
Right.
And if we can just close above 78, I think next week we can see us challenging the highs again here. And likewise, we probably see the other crosses also weaken as well. So
Okay.
that will be interesting because it could be a situation where we see the pound weaken against everything except the dollar. Because if the dollar finally does weaken, right now we're just seeing it not rally.
Okay, yeah. A pretty good hit, though. The dollar index chart still looks somewhat vulnerable to me. A lot of people are still playing last year's tune about a bull market in the dollar. It may be so, but if you look at the dollar index chart, the Dixie could pull back to 90 or lower and still be corrected. So, that.
I agree. I think this pair is. I think the dollar is due for some weakness. I agree with that.
Okay.
It's just not going to play out.
Okay, so we have this major breakdown in the yen after the BOJ made that attempt. So Guppy's been a home run ball for the Bears and risk off for a long time.
Yeah.
What are you seeing here? Same as it ever was.
Yeah. Got a beautiful move on the cut into negative interest rates, right to 75. Right. Bam, and it was a nice Fibonacci move. We came lower. It completed the move with these new lows, and really, I think at these levels, and maybe more so watching the dollar yen, I'm starting to hear rumors or hints of intervention by the Bank of Japan. So I think
they
that
have to put their money where their mouth is.
Right. They would have to. I think as far as the pound yen goes, I think when we see this $1.5660, which is a former support level, if I can zoom out some, way back here, then we saw it as support, and it's nice confluence with the 50 back, right, over the entire rally, since 2011 rally. So this to me would be our line in the sand. We still have room to fall, and so I think, despite wariness about whether the Bank of Japan steps in, I think we would see, in my view, we still have room to run to the downside. And really, this is about a 400 pip. This is a 400 pip move that's still.
To do that in a day. It's done that. We've had 300 pip down days on this decline.
Oh yeah. So we start to see. Commodities, or not commodities, but equities weaken, we might see this, accelerate further. So if the S&Ps can, come back down and test that 1800 line again, we could see the pound yen in particular test this target level at 156. So that would be interesting to see if we can get below. We'll get a close below 160, and that pretty much gives us some confirmation that we could head lower into this huge 50%
yeah, that's a great area, great number.
Mm-hmm. Yeah.
So you have confluence of a fib and a major pivot at that level.
Exactly. Right, absolutely.
Okay, so what else are you monitoring in the pound? I think we covered almost everything. Is there anything else you want to talk about?
Well, just continue to follow me, and I want to thank everybody for their support. Continue to get subscribers, and having a good time this year. This year has been it's been a volatile year, but it's been a really good time in the foreign exchange market. I think we're having a lot more fun than the stock guys right about now.
Uh, well, yeah. Except if you're a bear and you had puts in LinkedIn and it lost half its value in a day.
Well, yeah, it would depend
And
on
there's
what you
been a
bought.
lot of that kind of carnage in the market.
Oh,
So,
absolutely, especially on the
yeah,
bigger
I mean,
names. Yeah,
50% moves. A lot of stocks are down 50%, and the averages are actually disguising all the damage that's been done in the market. If you'd like, Lydia, you could show a screenshot of the quid report. And someone asked me earlier what quid means, and quid is a pound, right?
right. Sure. Yep.
Okay,
Quid is
so
the pound. Something I learned about a year ago while I was writing the report. I didn't have a title for it, um, and that came up, and I said, "Oh, that's interesting." So
well,
used it for the title.
if you watch Turner Classic Movies and they're over in England, that everyone says, "Oh, I need a few quid." They
Hmm.
didn't say pounds. Do
Right.
people still say quid over
Yeah,
there?
I think those who are in Britain and even I have Ghanaian friends who say quit a lot. So
Mhm.
yeah, I think it is still actually used.
Okay, so I know there are Larians, at least a few that have subscribed and have great things to say about the content that you provide. Anything else? I know you're uh, registered investment advisor too, and doing some things in some different arenas besides FX.
Yeah, I have to say, Joe, it's been actually really rewarding. Helping people make sense of the markets that aren't like us, are in it every day, and only hear the news headlines or the newspapers or the television. And it's been actually probably one of the more rewarding parts of my career is becoming an investment advisor and helping people just make sense of the markets and grow their wealth and really keep them from panicking. I've I've been doing a lot of that in
Okay,
2016.
so there's a
Imagine.
lot of sentiment measures show people as bearish now as they were at the lows of the financial crisis in '08. There is that type of fear there. So you're probably getting calls and people are worried about their 401ks and their retirement and what should I stay in or should I get out? What are you telling people to do? Ride it out?
Yeah, I mean, absolutely. There's no reason to churn your account now. And I think we've seen, to me, this is still even a correction, right? It's not even really a bear market. I think we're just still correcting, and we're still above the 18s. I think we can get to 17, really, and we're just looking at what to buy, so and obviously this is general advice. I have clients who we've moved into kept more cash last year because they're closer to retirement than my 20 something clients who amazingly enough are the ones they have more fear than my retirees. So, but I just think it's because they haven't been in the markets, and they're younger, and they don't understand the market cycles. And so that's really interesting. Older clients tend to be more have more risk appetite because they
Well,
realize, oh, it'll come back, it'll come back. So they tend to be more optimistic than some of the younger folks, which has been very
because
interesting.
they've lived through 2000, saw it come back. They've lived
Hmm.
through 2008, saw it come back.
Some of them
So
lived through the 70s, saw it come back.
yeah,
So for them,
yeah,
it's just like it'll be back. Like it's really the younger ones, which has been quite funny because to me, and to us, they should be, what can we buy? What should we scoop up? Should I allocate more money? And it's been an interesting education
yeah. It
for
is
them and for
interesting
me.
that the millennials seem more scarred by the last financial crisis than um, the boomers,
Yeah,
which
and
have been through more. I
it's
think they saw
really
what
good.
happened to maybe they saw what happened to their parents, and a lot of people were wrecked by it and didn't
Hmm.
stay in it and lost their homes, et cetera, et cetera. That's why
Right.
millennials prefer
Sure.
to rent. because they saw all the grief that people went through, and maybe that's why guys like Bernie Sanders and Donald Trump appeal to the public, because of what people have gone through, and many haven't recovered from the last Great Recession.
Yeah, I agree. I agree with that, and that's probably it. But like I tell my clients, you have to understand the behavior that kind of drove that crash to begin with. And if you didn't engage in that reckless behavior, you took loans out that you could afford. You weren't as scarred. And it's more understanding the behaviors. The Big Short actually did me a great favor. I got a lot of calls and a few clients after the Big Short came out and got its critical acclaim in the last few months. You can understand that there was reckless behavior. It wasn't just the markets blowing up, but there was an actual reason, even at a consumer level, as to why the markets did what they did. And how can we not engage in that kind of behavior? So, I mean,
Okay.
I've had a good time in 2016. It's been very interesting on all facets of business right now.
I have a question from the community, from Ricardo, that if the guppy holds 160, 161, where do you think it could bounce to before it headed lower?
Oh, that's a good question. I would always depend on my fibs here. I think I have the fib drawn here. If it holds 161, we would have failed low, and we would come back up to these 166 level, and we'd be in this Fibonacci zone here. So we could hit 168, and 168 it would be your line in the sand. If we get a close above 168, we'd be headed higher, 170, 172, 175. But if we can stay below here, we'd still continue lower. But yeah, if we hold here at these lows, I would see it'd be a failed low to me, and I'd like to see it return to the 166, 165, 80, 166 level, but we might even contend here with 163.50. So this has been a great level of resistance here as well. You have 164 back here. So, you can go through, let's say 163 to 166, and we see if we have some resistance there, but that's where we'd be headed.
Okay, so are you looking to attend any Hillary Clinton, Bernie Sanders, Donald Trump, Ted Cruz town hall meetings or rallies?
No, Dale. I stay right out of the politics. Truly, I don't even listen to the news like that. If not for my husband, I would not be paying attention. I know who I would like to vote for.
Yeah.
I listen to the candidates, and I make my decision very early. I don't need to see debates. I don't need to see the town halls, and I sure don't need to see the pandering. I leave that all to you political heads. It's so not my concern.
Okay, well,
I'll tell everyone I'm a Democrat, and I hope that we can retain the White House, considering the Republicans.
All right. So I was just interested, and do you think that this political season, basically, I don't care which end of the political spectrum you go to, you're hearing a lot of anti-business, anti-Wall Street type of class warfare rhetoric coming from both sides.
Mm-hmm.
Do you think that the next president is going to be good or bad for business?
I think that a lot of the rhetoric we hear now is to get elected. And at the end of the day, because I think President Obama used the same kind of rhetoric too, and he's actually been really good for business. So I think the rhetoric is just to get elected. And at the end of the day, you need strong businesses in the U.S. to create the job, to stimulate our economy, and for general growth overall. You can't be anti-business and still think that America is going to be great, as they say, right? So I think
from your lips, Lydia. That's the way I feel. Is we need pro-growth,
right?
And I think that the anger in the country would subside if we had some growth, and people that are living paycheck to paycheck were able to save and invest and have hope for the future
That's
instead of
all.
it being a survival game, which I know it
Exactly.
is for many people.
It is. Yep. Yep. And that is where the anger comes. It period. So, yeah, that's all. I think, more jobs and more growth, more money in people's pockets. If we can bail out individuals instead of businesses and banks, um, I think we would see a lot of the anger subside quite a bit.
Yeah, right. And there are people who said that if instead of bailing out institutions with TARP, if they had
Hmm.
just written checks to every American, that the recovery would have been dynamic instead of where the
Yeah,
bailouts
I
come from.
really thought that our president was going to have the wherewithal to do that. I really thought for the first 2 years, I thought refund checks were going to be huge. I really thought that that would have been the way to go as well. And so that didn't pan out. I mean, when you see some things, a little bit of mortgage relief here, some student relief, student loan relief there, but
Yeah,
honestly, a true bailout of the individual and of households, I agree,
yeah,
would have made a much bigger impact on the economy than the bailout of the banks, which was supposed to stimulate lending and didn't, which
yeah,
was supposed to stimulate investing and didn't. So,
yes.
you know,
Okay, well, I got you going. All right, so thanks so much. It was great hanging out with you again today, Lydia. Thanks for
absolutely.
your
Thank you.
thanks for your views on euro pound and the guppy and pound against the commodity currencies. Really appreciate the levels and ideas that you shared with us today, and hope this is continues to be a great year for you. I'm glad for you that you're having a great year.
Thank you so much. I wish the same for you. Continued health and happiness, and just have a good time. Have fun.
Thank you, Lydia. Have a great weekend. Good hunting, my trading warrior sister.
Thank you.
Everyone thank everyone thank Lydia Idem Finkley for her views today.
Thanks, guys.
All right, Lydia, take
Take
it
care.
easy. All right, bye-bye. Okay, so did everyone get their answers, their questions answered? Rick, Tosin, everyone? We'll get it handled. So crude is still going down. Is this where you wanted to buy it? All right, well, I'm going to wait till next week. I think Craig had Craig, you could show that pound CAD chart if you want to show it now. Yeah, Lydia's great. Everyone doing okay? Okay, here's Craig's look. I bet you did great. Here's the pound CAD. 195 being a key level for Craig. Oh, it worked out great, Craig. Here's this 195 line. It's a major trend line right here. Okay, I see. Under 95, there's problems. Probably back to these lows. Everyone thank Craig for his look at the pound CAD. Thank you, Craig. That's fine. So maybe one more daily high for the indexes. Okay. I don't know. That looks heavy to me. Guys, here's why I covered, I trade ETFs too. So this is why I got out of crude and why I'm looking to get back into it. So one of the crude ETFs that I trade is called UWTI. And to me, it looked like it was an incomplete pattern. You guys could probably guess why. So I caught this and I caught this, but look at this ETF here. What do we have here? We have 1, we have 2. So this is why I got out yesterday. Bought it down here, pitched it. What's missing? And it doesn't necessarily mean that crude is going to make a new low, but ETFs sometimes could be weaker or stronger than the underlying instrument. So to me, it looked incomplete, looked like we were going to have another drive to the downside. So just another market indicator I use for trading crude. One more low, I'm going to back up the truck and buy the heck out of it. Looking for a big recovery. I think initially to $4, $3.50, $4, and maybe eventually up towards 8 or 9. But this is one of the reasons I covered the crude yesterday, is because this rally was so weak. It was much weaker than the rally we had off the recent bottom. And my favorite formation being 3 drives to a bottom. Give me a Y if you see it. You don't have to agree with me. But that was one of the reasons I covered the crude longs yesterday. I think I'm going to wrap it up here. This is going to be the wrap up. So Euro had a negative week. We're trying to hold the support level here at the 110 level. We're beginning to diverge. This may have been it. Still a negative week, so I'm going to see what happens. There's still a possibility that we head down towards 110 in the coming days. To me, it's not a great short here the way it looks. Pound looks a little weaker to me. I agree with Lydia that there's another run in Euro pound to new highs, which makes me favor. I actually have targets kind of above where she was talking about. She had 80. This third drive line could take it to 80.5, which favors the Euros. Okay, watermark the charts. Okay, good idea, Doug. So with this happening here, as long as we're holding the 77 level like Lydia talked about, maybe the Euro has one more run in it. CAD, I still think that there's going to be a better short. Some people are saying this is a major bottom here at 36 and we're going to go to new highs. I favor retracement moves, maybe back to 141.60. Alexandro showed that on his cloud charts. There was a line coming in at 41.55. So if crude continues to come off, we should have more of a lift in Canada. I think we're going to rally. This may have been wave A, and now we're going to get a B wave, and then we get a C back down to 32. So that's the path I'm expecting. With the right, I reserve the right to change my mind, because as W.D. Gann said, if you don't learn how to change your mind, you won't have any change left. And as Dale Pinkert says, remember, my friends, my trading warrior brothers and sisters, don't just count your pips, count your blessings. Let the people in your life that mean so much to you know it. verbalize it, express it. Have a great weekend, everyone. I want to thank everyone for their great contributions. Another outstanding week of masterminding with everyone here in LAR. Another week of excellent interviews with people giving us their work so that they have visibility to our community. And I look forward to having an even better week with everyone next week. So enjoy your weekend, my friends. Go smell the roses. Get away from your platforms. And I'll see everyone on Monday. Individually, I want to thank Ali and FX John and Jay and Roland and SW, Forex Pipper, Doug, Artem, Craig, Tozen, Ricardo, Fab, Jack, Sinatra, Lerner, Abel, Beckton, Graham, Izzy, Sinatra, Mauricio, JM, Adinda, MRC, Flash, DZ, Fame, Planet, What's Happening, and BW. I want to thank Adinda. One more test of the lows. Rick is going to leave us with a crude shot. Okay, so you agree with it. The third drive, Rick. Okay. Well, that even gives me more conviction. So we're wrapping it up with Rick showing the path in crude right here. So we get one more shot down, and then we have the big rally before the crash. Thank you, Rick, for all you do for our community every day you're here, and everyone else. Have a great weekend. Adios. See everyone Monday. Okay, my friends. You're welcome. You're welcome, everyone.